Hello everyone and welcome back to the Velocity channel, where this is your bridge to financial freedom. Today we're going to take you on a journey. We're going to show you how to take a 7-year auto car loan worth $34,000. Let's go ahead and take that down to 1 year. All right, and we're going to show you how it's done step by step. But before we get into that, I want you to like, share, and subscribe so that everyone across the world can know just how powerful Velocity Banking is. With your permission and without me getting in the way, can I show you how this is done? All right, thank you so much. So before, as we say before, let's go ahead and show you what we're doing with our $34,000 car loan, okay? This is where we're at. This is the amortization table, and this over here is our line of credit. Now, before we knew about Velocity Banking, we would run up lines of credit. We would buy J's, we would buy Yeezys, we would buy all vases, vases for you Americans out there. We would buy all these things on our credit card before we knew any better. And they had us getting charged $400 each and every month as our minimum monthly payment. And oh, by the way, that line of credit is at 21%. And then we found out another way to do it, all right? Listen, $5,000, getting paid $5,000 each and every month, and our expenses being $3,000 each month, we had to figure out a way in making sure that our finances were allocated towards the correct places, right? We were segregating our income, and that wasn't the way. So we found out that we could use our line of credit as our new checking account, and this is what happens. When we use a line of credit as our new checking account, we found out that $2,000 that was left in our checking account could actually be left inside of our line of credit account, okay? While that $2,000 is in that line of credit account each and every month, guess what's paying it down? And this is the formula. Line balance, right? $10,000, right? That was our balance. And then we divided by our cash flow, and this is how many months that line of credit is going to be replenished back to $10,000. It's going to take us 5 months. Now, knowing that, keeping that in mind, let's go on to eliminate our car loan. So this is how it looks. The amortization on a car loan, we're talking about 10%, 8.5% sales tax, all right? All the fees are included, and this is how it looks. That $540 that we owe to that $34,000 car month, each and every month, we have to continue to pay the same amount from month one all the way up to month 84, because remember, it's a 7-year auto loan. So with that in mind, let's look at this. What if at month 1 we said, you know what? Our $10,000 is replenished. So I'm just going to go ahead and place this $10,000 towards my balance. So now I'm down here. But what does that mean? That means in one pen stroke of our check, in one swipe or insertion or tap of our credit card, we are already at 32 months. So we've jumped ahead, folks. And look at how much is going to interest now, right? This $271 was going to interest at month 1. The $269 was going towards the principal. But now at month 32, because of the $10,000 we've deployed, $192 is going to interest and $348 is going to the principal. That means it's going to get paid off much quicker. Less is going to the bank. Can you say hallelujah? Now, we still have to pay each and every month. Let's not forget that, okay? Oh no, we gotta pay $540 each month. Month 1, month 2, month 3, month 4, month 5. Now remember what's going on in these months. What's paying off that $10,000 that we just deployed? Our income, our cash flow is paying it off, right? Income minus expenses, that's cash flow, okay? So that $2,000 each and every month, because remember, in those expenses, that $540 is part of that expense, okay? So you're replenished in month 6. So what are you going to do with the $10,000 that you've just replenished on your line of credit? Where is it going? It's going towards the car loan. All right, my goodness. Wait a minute, but at month 6, you're already in month 62 according to the bank's plan. You see, the bank wants you to be at 62 months and having $10,820 left on the balance, but not with Velocity Banking. With Velocity Banking, you're already almost close to paying a $34,000 10% auto loan off at month 6. Now, you're not done though, okay? You still got a balance, okay? You're already at this number, great job, but you still have to pay it off. So let's do $540 month 7, $540 month 8, $540 month 9, $540 at 10, $540 at 11, and what's this? On month 12, you don't have any more payments on your auto loan, but you're only getting paid $5,000 each month. It's because it doesn't matter how much you get paid, folks. It matters how much your cash flow is flowing. Cash is not king. Please write this down. Cash flow is king. The higher your cash flow, the faster you're going to pay down that debt. And that's on any debt, all right? This is how you pay off a 7-year car loan in 1 year. Now, of course, you can do it several ways, and you can even do it faster than this. If you did not want to do it this way, there's a lot of options that you have. Please contact us, all right? But with this, please keep in mind that you've paid this off with a minimal effort on your part. Remember, this $10,000 wasn't doing anything. It wasn't doing anything except getting you deeper into debt. You were buying things with it and not your future. Look at what you bought with it. You bought 62 months. To those that want to question this method, what did you buy with it? You bought time. You know, in an ancient writing somewhere, it says it's wise to redeem the time. Okay? So that's what you did with the $10,000. You bought time. You skipped ahead 32 months on your loan is what you did. You saved up thousands in interest is what you did. You understand? Look, month 62, you're already there. And so now that $540, where can that go? And oh, by the way, by using this method, you don't have to worry about a minimum monthly payment on your line of credit ever again. And now you have more cash flow to pay down more debts toward your assets now. Because now that's what you're going to be using loans and lines for, to build your assets so that your assets can pay for your bills, can pay for your boat, all right? Can pay for your things. And that's what we want, all right? Folks, if you have any question about this, go ahead and take a snapshot of this and make sure that you memorize it, if you will. Because you can actually transmute it into your situation. Perhaps you don't have $10,000. Perhaps you have $5,000. Okay? Perhaps you have $2,000. You can still place it towards the principal, and that principal will come down. And guess what else comes down as well? The interest. And that is how you cancel your interest. If you don't have a line of credit, you don't have to have a line of credit at all. Please see the description below so that you can get your very own Velocity Banking debt elimination plan so that you can get off of their plan and onto your plan, because you are what it's all about. God bless, and we'll see you in the next video.